Do you remember how gold's not for you? Well, turns out that central banks, BRICS nations, and billionaires are buying in. Everyday Americans, however, they're holding back. You're here again with the meager millionaire. I'm going to run my mouth some more as I do. And thanks for showing up. Please like, share, subscribe. And yeah, let's get into this. It states that gold hits record highs as central banks, BRICS, and billionaires amass the metal, amassing pet rocks, I see. Everyday Americans hold back, constraints by rising costs, leaving untapped potential for future gains. Now, if you're anything like me, you know that gold is money. You know that what we transact in on the daily, fiat currency, is dog shit. And we understand that we must trade dog shit for real money. It's very simple. As gold soars to a new all-time highs and silver edges closer to record levels, a global shift is underway in the world of precious metals. Central banks, BRICS nations, and high net worth individuals are snapping up gold and silver at unprecedented rates. All right? So if you guys have been stacking for any time at all, if you have two functioning brain cells, you are in the know, okay? Now, reinforcing the metal's status as a safe haven asset amidst financial turbulence. We're not in financial turbulence, are we? No, the economy is booming, all right? Well, we're running on Bidenomics and Trudenomics and all these masterminds that really have our best interest in mind. However, while the elite consolidate their gold holdings, many everyday Americans find themselves unable to participate, watching from the sidelines as prices continue to climb. Now, you ask yourselves, do you think that the price of gold is going to go up, go down, or stay the same? Well, I believe they can pull back short term, but I believe that the long term trend is to the proverbial moon. The gold and silver surge. Who's buying? All right. The latest data from the World Gold Council highlights the central banks have been an aggressive gold buying spree for years. Duh. In 2023 alone, central banks added more than 1,000 metric tons to the reserves, the most in over 5 decades. Now, what happened 5 years ago? Basel III in Switzerland made gold tier 1 asset, all right? Get it through your heads, please, or you're going to be left behind. The BRICS nations, Brazil, Russia, India, China, South Africa, have collectively fueled the surge, viewing gold as a hedge against the dollar's volatility. Meanwhile, high net worth individuals and institutional investors have intensified their accumulation, betting on gold's resilience amidst inflationary pressures and potential currency devaluation. Potential currency devaluation? Are you shitting me? Potential currency devaluation. That's the play, people. The currency has been devalued since you've been out of the womb, all right? It's just been happening slowly. Now it's time for all of us to jump out of the pot of boiling frogs and get into real, tangible, hold it in your hands assets. For billionaires, gold's appeal is clear. It acts as both a store of value and a shield against currency instability. Now ask yourselves, is the dollar in your pocket a store of value, or are like maybe a few ounces of this stuff a real store of value? I think you already all know the answer to that. In a recent report, it was noted that 21% of ultra-high net worth individuals globally increased their gold holdings over the past 2 years. This trend is mirrored in the activity of sovereign funds and central banks, who view gold as a crucial strategic asset. Okay, let me ask you a question. The banks view this as a strategic asset, but the general public think that it's a barbaric relic. Now, who do you think is going to be on the right side of this trade? You think that the banks are going to be on the right side of it, or do you think that the population is going to be on the right side of it? We all know the answer to this. The population is going to get eviscerated, and the banks are going to hedge out their books, and they're going to make off like bandits into the night. While everyday Americans missing out. So why are everyday Americans missing out? Unlike their wealthier counterparts, most Americans are not part of the gold rush. The average household continues to grapple with soaring living costs, with many living paycheck to paycheck, leaving little room to buy precious metals. Everyday Americans simply don't have the disposable income to buy gold. Much of their wealth is tied up in real estate and basic expenses. Yeah, so they own houses that they can't afford, they live on credit cards, they're robbing Peter to pay Paul on a monthly basis, and they save no money. And they believe that currency is going to see them off into their retirements, into the sunset, and they just once again think that this is a barbaric relic. So while they're asleep at the wheel, us more astute types are going to absolutely light it on fire. Rising interest rates in silver, an affordable alternative. Well, since I think that silver is free, yeah, it's fairly affordable. Although gold remains out of reach for many, silver offers a more accessible entry point into precious metals market. So I disagree with that. You can buy fractional gold, you can buy grams of gold, although the premiums are high on the smaller denominations of gold that you get. The 1 ounce is the best value, but you can buy smaller fractional gold. This is a lie. Don't tell me that you don't have $100 to go buy a gram of gold or $150 to buy a gram of gold. I'm not buying it. Silver prices have been rising steadily, and small investors are turning to the metal as a potential hedge. Many acknowledge that the gold is beyond their budget. Silver is attainable, allowing them to accumulate small amounts where possible. With demand spiking, silver's upward trajectory may continue as more people recognize its potential. So this is the same song and dance, different bunch of fools, it seems. From the research that I've done throughout history, whenever a gold rush happens and the population cannot afford gold, they rush to silver. So let's read on. Gold's future, plenty of room to run. And it's asking a question here. You ask you a question. Do you think that gold is going to continue? I believe that the gold run is only just starting. Personally, I believe that we have been in a gold bull market for at least 5 years. And still, when I told, let's say, family members 5 years ago, I was a conspiracy theorist. So now that my holding is doubled or more in value, I'm still a conspiracy theorist. So let's have a look. Despite record high prices, analysts believe that gold and silver still have room to climb. Limited access to these assets among American households could mean that a substantial portion of demand is still untapped. The public will only rush to this whenever the media talks about it, okay? So if you're, a critical thinker type, you kind of get out ahead of this stuff, and then whenever the masses show up, and then you give it to them. According to data from the Federal Reserve, the average U.S. household holds less than 0.5% of its wealth in precious metals, compared to a significantly higher percentage in countries like China and India. We talked about this. The Indians and the Chinese know something that the West doesn't know, okay? The West here, dumbed down. The East over there, seems like they're a little bit smarter, so let's act like them. This desperately suggests that any future price correction could attract additional interest from Americans if economic conditions allow potential pushing prices even higher. So we're going to get rate cutting cycle here. Inflation's going to roar back up. I believe they're going to get a super spike in interest rates and people are going to get caught with their pants around their ankles. So I'm betting as such. In the meantime, some Americans have turned to the alternative investments like Bitcoin, which doesn't exist. Okay, it's make-believe. You can't touch it. Look, see this ounce of silver here? I could bite it. I could give it a lick. I can smell it. Bitcoin, can't do none of those things. Viewing it as a digital gold of sorts. It's not digital gold. Bitcoin's make-believe, all right? However, traditional investors continue to view precious metals as the ultimate hedge against economic uncertainty. It's because it has been money throughout history, and you see, in our lifetimes, it's been taking out of the money, and you see the public has lost the knowledge. So let's just go backwards to go forwards. Let's think critically about this, people. Looking ahead, as central banks and affluent investors deepen their positions in gold and silver, what do you think you should do? This is not financial advice. Don't listen to me. I am full of it. The gap widens between the have and have-nots in the precious metals markets. For those already invested, the potential for appreciation remains promising. So look back 100 years at the price of gold. Tell me where it started. It started about $20.67 American an ounce. And then look at the price now. And then tell me where you think that it's going to go. It's a no-brainer. For those already invested, the potential for appreciation remains promising. For those on the outside looking in, however, rising prices means that the window of opportunity may be closing faster than anticipated. All right? Don't rush into this stuff. Slowly accumulate. Add your positions over time. Don't go balls deep day one, okay? In the face of this divergence, one thing is clear. Gold and silver are more than mere commodities. They're real money, okay? They're the backside of the real money. Fiat currency is make-believe. Gold is real. Bitcoin is also make-believe, just for the record. They represent a global vote of no confidence in fiat currencies. And as central banks keep piling on, their accounts send a message that echoes louder each day. So, we looked at this article from the Jerusalem Post, all right? This just come out yesterday. So, you tell me what you think. Do you think that the central banks are buying something that is no good? Or do you think that the central banks are front running a trade so they can hedge their books out whenever the fiat currency and all these bad debts that they currently have on their books blows up? If they're hedged out in something that can, reprice their books when it runs, it seems only logical thing to me. Anyhow, like I said, this is not financial advice. Don't listen to me. Gold is not for you. Don't buy gold and silver. And anyhow, enjoy your Sunday. I will see you again early next week. Take care.